Dishonor of a check. Mary sends John a check for $2,200 to pay off her debt. John deposits the check in his local bank. He checks his bank account bright and early a couple of days later to see his balance increased by $2,200. He is preparing to pay his creditor Jim. Imagine John's surprise and anger when the check is returned to him by the bank and the amount taken out from his bank account. What happened? Well, I'm sure you know, Mary's check has been dishonored by Mary's bank. Can you think of at least 4 reasons for a bank to dishonor a check? Here is a suggestion. Most likely, there was not enough money in Mary's bank account, so Mary did not have $2,200 in her bank account. However, it is also possible that the check has not been signed, or the amount in words did not agree with the amount in figures. So remember our chapter on source documents. Or perhaps the check wasn't dated or was dated incorrectly. So it was a style check or too old check, or the check dated in the future date. Anyway, here is a little diagram to help you. So, the original transaction could have been a cash sale, or it could have been a payment for a credit sale. So what journal would you use to record such a transaction? And would that make any difference to your entry if the company or the business used perpetual or periodic inventory system? All right. In our example, whether you use cash sale or the payment was for a credit sale, we're going to use the general journal. It is possible to use specialized journals, but we're just going to consider one example of the general journal. Now, perpetual or periodic really doesn't matter. Because the inventory stays with the customers, the inventory does not come back to the business, it doesn't matter what inventory method was used because the inventory is gone, it has been taken out, so it doesn't matter. Let's consider an example. We will begin with the cash sale. Alright, so 11th of May, we've got Martin, and Martin receives a check for $176 from Gary for a cash sale. Let's assume we are using perpetual inventory system and the cost was $100. A couple of days later, Martin's bank advised that the check from Gary had been dishonored. The bank fee of $30 has been deducted from Martin's account. Now it's very interesting what the bank does. Imagine Martin takes the check to the bank expecting to have some money. A couple of days later, the bank returns the check to Martin and says that the funds were not available or some other problems were with the check, and the bank charges a fee of $30, $40 or whatever it is dollars. Now really, if you think about it, the fee should have been paid by Gary because Gary didn't put the funds in the account or didn't prepare the check correctly. But because Gary is not the person interested in paying, or perhaps doesn't have enough money in his account, the bank will bill Martin. It's up to the business and the trading terms and conditions agreement if Martin can charge Gary $30 back or if he can't. So let's go back to our example. On the 19th of May, Martin contacted Gary, who advised that he had problems with the bank and asked that the check to be deposited again. We need to record all 3 transactions. Remember, we're going to assume that it was a cash sale. Here is a journal. So I copied the question here for you so you've got it in front of you at all times. So 11th of May, remember, Martin receives a check and it was a cash sale. Alright, so a cash sale, how do we record a normal cash sale? We receive cash and that's asset and it increases, so that's the debit entry. I'm going to call this account bank, but perhaps you want to call it cash or cash at bank. It doesn't matter. All right. So Martin gets $176 in his bank account, and that's the debit entry. The credit entry would be sales for $160, so GST exclusive, and the GST payable or GST received. So the GST that Martin owes to the tax office is $16. In addition, we will have to record cost of goods sold transaction because we are using perpetual inventory system. So cost of goods sold for this transaction was $100 and inventory went down by $100. Well, we can put a quick description here, cash sale or similar. All right, 14th of May, guess what? The check has been dishonored. So what we need to do, we'll have to take the money from Martin's bank account. To take the money from the bank account, we will have to credit the bank. Really what we'll have to do, we are reversing this transaction here. So we're saying cash sales really did not happen. So to reduce sales, we debit sales by $160. Martin doesn't have to pay $16 to the tax office because the sale hasn't happened. So GST payable received $16, and because the cash has been deducted from the bank account, we're going to say bank $176. Do we need to reverse COGS and inventory part of the transaction? Guess what? The answer is no, because the inventory is still with Gary, not with Martin. So we don't need to reverse this part of the transaction. It stays as is. In addition to this, the bank also bills us a fee. So I'm just going to put the quick description here. I'm going to say dishonor check as a description. I'm just going to abbreviate everything as much as I can. All right, and now let's account for the bank fee. So it's $30 deducted from Martin's account. So cash is definitely affected and Martin is losing cash. So we need to credit bank $30. The question is, what do we debit? Well, we can debit bank fee expense. Not sure why it comes up in italics, or we can debit accounts receivable account to Gary, but we can only do it if it is in trading terms and conditions. Okay, so what I might do, I might make that a different color, some sort of a nice and green color, so you know it's not part of the transaction, but it's an alternative solution. All right, so if Martin can bill Gary, he will, and in this case the debit will go to accounts receivable Gary and credit will still go to bank. However, if Martin cannot bill Gary for some reason or doesn't want to bill Gary, then we're just saying bank fee expense 30 and credit to bank 30. The description will be dishonor check fee or similar. Don't really have space for description, so I'll just leave it. Next transaction, the 19th of May, we've got Martin who contacts Gary, and Gary says, could you be so kind and put this check in the bank again? I've put some additional funds into my account. So what we're doing, remember the original transaction? We reversed it once the check has been dishonored. Now we are putting the check in the bank again, so we need to reverse this transaction. or repeat this original transaction. So we are saying debit bank because we're taking this wonderful check to the bank. Now we're saying, well, the sale has actually happened for $160. We are liable, we have to pay the tax office for the GST payable, or sometimes people say GST received, $16. We don't need to do anything with the cost of goods sold on inventory because we have accounted for it on the 11th of May. And we don't need to do anything with the bank fee expenses or bank because the fee has been paid to the bank, and unless we get to recover that money from Gary, it becomes our expense. So in brackets, we can say dishonored check deposited again, or similar description. And that's pretty much it for cash transaction. So let's continue to a credit sale. Let's imagine it's a credit sale. So very similar. 1st of May, Martin sells inventory to Gary. 11th of May, Martin gets a check from Gary. 14th of May, the check is rejected. And the 19th, we put the check in the bank again. Alright, so here is the template. So on the 1st of May, Martin sells inventory to Gary. Now, because this is a credit sale, we don't get the money in the bank account. What we do have is accounts receivable control account. So accounts receivable control account, or you can say accounts receivable Gary. That's what I'm gonna do. Gary. It's $176 because that's how much Gary owes to Martin. And credit goes to sales for $160. And then we've got GST payable or GST received, depending on your chart of accounts, of $16. We also have cost of goods sold of $100, and we reduce the value of inventory by $100 as well. And we'll put some reasonable descriptions such as a credit sale to Gary. Okay. All right. What happens on the 11th of May? On the 11th of May, we received the check from Gary. So you see that accounts receivable is no longer an accounts receivable because Gary pays money to Martin. So Martin receives money. So Martin will put the check in the bank and the bank balance will go up by $176. Now Gary no longer owes money to Martin, so Martin must reduce an asset accounts receivable Gary by the full amount of $176. So accounts receivable for Gary is now 0 and the money sits safely in the bank account. So we can say payment received, or check received, or cash receipt, or cash receipt Gary credit sale, or similar. Alright, 14th of May, the check has been rejected by the bank. So remember how with the cash transaction we had to flip the transaction? We gotta do the same thing here. But we're not going to the original credit sale. We need to reverse the cash receipt. Okay, so that's what the difference is. We're not touching this because there was no cash impact here. We only received check on the 11th of May. So only this transaction gets reversed. Alright, so we're saying we'll need to increase accounts receivable Gary by $176 because guess what? Gary still owes us some money. And because the bank will deduct $176 from our account, we need to credit bank to account for it. So the description could be dishonored check or similar. All right. What are we going to do now? Guess what? The bank also gave us $30 fee. Again, the fee comes out from the bank account, so the bank account will go down by $30. Okay. What we need to do, we need to work out if we can bill $30 back to Gary. If we can, we will debit accounts receivable. If we cannot or we do not want to, then we can say bank account or bank charges, bank fees, some sort of a reasonable description for this expense account. So bank fees expense or indicates that it is expense. Or accounts receivable Gary, subject to the trading terms and conditions. So remember, it's not the account name, it's just an alternative solution. Okay. And the description will be dishonored check fee. Right. 19th of May, Martin deposits the check again. So Gary believes that he's got enough funds in his bank account. So here is the original transaction. Here is the reversal of that transaction. And guess what? Now we need to reverse the reversal, or we need to repeat the original transaction. We're taking the check to the bank, so the bank will go up by $176, and we need to decrease accounts receivable Gary by $176 because really Gary doesn't owe us that money anymore. So we can just say dishonored check deposited again or similar. Alright. You know what I forgot? I forgot to put $30 here. Sorry about that. Okay. Now, let's assume that we're pretty much finished. Okay, so if the $30 went to bank fees expense, then we're done. However, if we billed Gary for the additional $30 will still stay outstanding on accounts receivable Gary account until we get a new check or an electronic funds transfer for $30.